Nigerian equities market has continued to witness profit-taking on bellwether stocks as investors continue to sell down on their positions, putting the NGX All Share Index performance at 18.8% year-to-date. Victor Onyema, a portfolio manager at Norrenberger Advisory Partners, joins us now for a market update. Victor, it's a pleasure to have you on the program. So, I'm sure many will be watching the market now and getting very concerned because 2 weeks ago, the market was up about 25%. Now we're down. So we're up only about 18% right now. How do you see things trending from here?
Okay, thank you, Wally, for having me. Basically, we've seen a very strong for a bit now. And it is expected that investors will continue profit-taking sell-offs. We're expecting very strong to continue in the next few weeks. If you're looking at the fixed income aspect of the market, we've seen that yields are looking to be on the rise. And looking at NPR also being increased, it's expected that there will be a number of sell-offs and people taking profits in the market. With this, we also expect bargain hunters to look at cherry picking some stocks that are similarly undervalued in the next few weeks, looking at the H1 result coming out in July. So yeah, we expect very strong to continue.
All right, and would you say that the concerns around the economy is really setting investor sentiment right now? Because it's quite odd to see the market trending lower with oil above $100 per barrel.
So if you're looking at the economy, we have inflation at 17.7, having oil prices above $100, around 115 thereabout. I think one of the major issues, the reasons why investors are pulling out at this point are really about uncertainties. We have elections coming up very soon. We've also seen an increase in Fed rates in the US and other rates also increase in other countries. It's expected that people will take profit in of the equities market and look to less riskier assets such as fixed income instruments. So it's expected that profit taking will continue basically.
So how are you allocating in this market in terms of sectors and specific companies? What do you like?
In terms of sectors, it's obvious that the oil and gas sector is one that should be looked at with commodity prices on the high. Look at the likes of Seplat and other oil companies, the oil sector doing pretty well. Also, at this point, it's important to also look at stocks with dividend yield, such as the likes of GTCO, Zenith Bank, WACO, and the rest of them. So it's really important now to look at fundamentals and also look at dividend yields and entry points at this point to become sectors of focus.
All right, you mentioned the oil and gas space, and I couldn't agree with you more with oil above $100 per barrel. But we've already seen a move to the upside in that space. Are you suggesting that we're going to see even a greater rally from this point?
In the oil and gas space, yes, I think oil prices would remain bullish. There's basically a scarcity of commodities. There's high demand for commodities, so it's expected that that will continue to drive the oil prices. So we're expecting to still be over $100 at least for the foreseeable future.
Investors are emotional. They react to the news, and now we're seeing stories around fuel shortages in Nigeria. We know definitely the fiscal pressures continue to weigh on the minds of many investors. How do you see things playing out in the context of the news flow? How do you see this impacting the market? How significant could this bear run be in your view?
So if we're looking at fuel scarcity or prices for, for example, diesel, we're seeing the operational cost for a lot of companies are going over the roof basically. So what we'll probably see increased revenues, but we'll also see high costs. So basically, meaning their margins become thinner. That's a bit of a worry. We'll probably see saturation for FMCG companies as well, trying to reduce costs and pass costs to the final consumers.
All right. Very quick view on the fixed income space. The expectation is that with inflation where it is and the shift in sentiment by the MPC at his last meeting, we should see interest rates begin to even rally further from where they are. What's your outlook for fixed income yields?
Yes, it's expected that yields keep going up, basically. So at the bond auction yesterday, for example, the 42s closed that the stock rate was 13.15 as against the previous one of 13. So yes, there was an increase yesterday, but I don't think it was as much as most people expected. So we'll see in the coming weeks how the direction of the yields will go, but we're expecting to be on the rise for at least a short time.